Welcome to PhillipCapital Weekly Market Watch. I'm Alice, Global Market Specialist from Phillip Securities Global Markets. And now we will have a brief review on global equity markets performance for these 2 weeks. First, let's look at the US market. In the first 2 weeks of this month, US stocks did not meet the market's expectations. The volatility and risk aversion sentiment increased due to the geopolitical risk and the policy uncertainty. On the 10th August, the three major US indices tumbled, while the VIX index closed up at 44% on the new time record high since the election. And the stocks market fell sharply again on the 7th this month due to the Spanish terrorist attacks. The technology led the gains in July, but this month it didn't perform as well as it used to be. The share price of the most well-known tech companies became more volatile. From 1st to 21st of this month, Google's parent company Alphabet fell 2.7%, Amazon fell 4.3%, Apple rose 4.8%, Facebook fell 1.2%, Microsoft fell 0.6%, and Tesla rose 5.7%. On the contrary, US-listed China concept stocks rose ceaselessly. Alibaba announced its second quarter results last Thursday with revenue of $7.4 billion, which increased by 46% on a year-on-year basis and beyond the market expectations. The share price rose nearly 5% on that day. In addition, the Chinese social media Weibo also released the results for its second quarter net profit, which rose 152% year-on-year, and the recent stock's price continuously reached its all-time high record.
It is worth mentioning that Ray Dalio, the founder of Bridgewater, which is the world's largest hedge fund, issued several risk warnings to the market recently. He is concerned that the current market risk is climbing even though the market volatility is still small, and the geopolitical risk between United States and North Korea will continue to rise. Dario also suggested that investors should consider to allocate 5 to 10% of gold in the total assets to hedge the political and economic risks.
Now let's look at the China market. The Hong Kong market has entered a short-term consolidation stage since August. The Hang Seng Index hovering above 27,000 points for nearly 1 month. The leading stock Tencent Holdings released its first half-year financial report last week with earnings of 41.83 billion yuan, which rose 51% over the same period of last year. And the company's share price reflected its beautiful performance. The stock price has already rose more than 70% this year till now.
In A-share market, China Unicom, which is the leading stock of telecommunication industry, finally reviewed a formal mixed reform scheme and resumed trading in August 21st after more than 4 months suspension. The share price has remained the daily limit up prices for 2 days without suspense. We expected that it would lead a new round of market enthusiasm in state-owned enterprises reform-related stocks in A-share market.
With this, we have come to the end of this week's Market Watch. For more information on global equities, you may approach any representatives from Phillip Global Markets. Subscribe to us on PhillipCapital YouTube channel and Facebook for more Market Watch videos. Thank you.